Trump administration has suffered much political turbulence, but this week was the first time its troubles had a real impact on the stock market. The S&P 500 fell 1.8% on Wednesday, its largest fall since September. The catalyst for this was the New York Times reporting that FBI Director Comey had recorded a memo of his meeting with President Trump in January, where Trump asked him to drop the investigation into National Security Advisor Mike Flynn. Along with the steep fall in the stock market, US bond yields declined and pricing for a June Fed rate hike fell to about 65%. The issue for markets is not necessarily the question of impeachment, but at least that it's probably going to be a major distraction for the Trump administration's policy agenda in the months to come. Markets obviously would like to see progress from the White House in terms of tax reform and infrastructure spending. It was these expectations that had boosted the US dollar, US yields and the stock market after the November election. While the US stock market and bond yields are still higher than they were before Trump was elected, the US dollar, as measured by the dollar index, a basket of currencies, has now fully unwound the Trump rally. The Australian dollar hasn't really benefited too much from the weakness in the US dollar, which is perhaps not too surprising given that the Aussie tends to struggle when equity markets are under pressure. But the Aussie is still a little bit higher over the week, with some help from Australia's strong April jobs numbers. Employment in Australia rose 37,000 in April, taking the two-month total to almost 100,000. The unemployment rate dropped from 5.9% to 5.7%. But overall, we would characterise the report as largely being a catch-up to other indicators of economic growth, particularly after very soft jobs numbers over the Australian summer. And it's not really a game changer for the Aussie because the Reserve Bank seems to be firmly on hold in terms of monetary policy. The Aussie did get a bit more support, however, from commodity prices this week after China's Belt and Road Summit in Beijing. There was a bounce in energy prices, steel prices continue to rally, and iron ore prices seem to have stabilised in the low $60 to $62 a tonne area. The calendar in the week ahead is fairly light, with most of the key releases clustered into the first week of June. In Australia, we do have on Wednesday the first quarter construction work release, which provides a little bit of an indicator onto first quarter GDP. Overall, in the week ahead, the Australian dollar is likely to continue to find some support from a softer US dollar, but this is likely to be capped by uneasy equity markets and the prospect that Fed officials come out to indicate that they still plan to raise rates in June. Commodity prices should lend a little bit of support to the downside. This is likely to see the Aussie continue to trend towards support around the 73.30 level, with rallies capped around 75 cents. We'll speak to you next week.